Today, I am joined by Ryan Melton, former financial advisor and host of the New Zealand Business Owners podcast. Ryan also advises fast growing New Zealand startups like Equity and brings some sharp insights on finance, crypto, building wealth, and being a business owner in New Zealand. And just before we start, I want to just express that this discussion includes insights from non-affiliated third parties and key opinion leaders. Binance provides this platform for informational and educational purposes only and is not responsible for any content or insights provided. This information should not be considered financial tax or investment advice from Binance. Can you tell our audience about your background and how did you get involved in advising people on the financial side or advising companies and business owners in New Zealand?
Yeah, so my end goal was to help people live fulfilling lives, and I didn't understand money. I was good at building sales teams, and so I thought, how would I learn about money? I'll just start running events.
Yeah.
And I'll pay for all the events, and I'll just ask people that understand money to speak. So I door knocked a whole lot of financial advisors, said, hey, would you like to speak? They said yes. And then they said, would you like a job? I'll pay for your studies. And I was like, okay. So then I worked as an advisor for 4 years, grew funds under management, and now I am working with Acuity, which essentially gives people mentorships and a way to invest.
Well, that's fantastic. So what does first question, what do financial advisors even do?
Yeah, I mean, main thing financial advisors is just clarity about what you want. I look at them like a financial planner. So in New Zealand, there's different types of advisors. All being an advisor does is gives you the right to sell a product, essentially.
Yes.
And the different products are investment, insurance, and debt.
Yeah.
So I was in the investment piece, and the investment advisors, their whole thing is just to basically think about, what do you want from life? What do you have? What could go wrong? And how do we get what you want in life using investment? So essentially just creating a clear, they're more like life coaches that use money as an excuse to give you coaching on life.
Yeah. You know how I've heard about that in US, you have to be like a fiduciary or there's some sort of a registration licensing type process. Is this similar here in New Zealand?
Yeah, so you need to do qualification, and then you need to get your, if you have any criminal convictions, and you have to have a good credit rating.
Yeah.
And then you register for the Financial Service Provider Register.
Yeah.
So anytime you're going to meet an advisor, you look them up on there just to make sure they actually are a financial advisor. You search their name.
Yes.
And they also have to have a license, a financial advice provider license, which is you work for a company or be the company, and that enables you to provide advice on certain products. So yes, same idea.
I'm sure there are good financial advisors and they're not so good. If you're going for someone now as a consumer, as a user, how would you know that this is a good financial advisor? I should listen to their advice, or this is not a good financial advisor.
So we'll look at the different categories, because I also have a company where I grow financial advisory firms. So I sort of across a lot of different ones.
Yeah.
So investment, to determine if someone's a good investment advisor, is the difference between wisdom and knowledge.
Yeah.
So a lot of the advisors have similar competency,
Yeah.
but don't have the wisdom to manage your expectation. For that, I mean, they say, oh, you're probably going to have a period of time where your money goes down for 3 to 4 years.
Yes.
Are you mentally prepared for that? Yeah. They also won't sell you on returns because they know when returns go down, they'll lose their clients.
Yes.
So if you have an advisor that's selling you on returns and promising you the world, telling you to change providers because of returns, they're not a good advisor.
Yeah.
So just think, if you're going to be prepared, one, know enough about the different things about diversification and the different products and stuff. So that's knowledge is power to protect you.
Yeah.
But then also look, the implementation of it, what will look for my life? And are they helping me navigate through that?
Yeah.
And then insurance, I don't know if we should say to investment or insurance or debt.
Maybe just on the investment side.
It's related,
Yes, because it is related, and a lot of the people tuning in would have heard of the Binance brand as a centralized exchange on the crypto side, allowing people to
to invest, and they've been in this space for quite a number of years. Just talking about, say, Binance or crypto, or I'm sure there's new products every day or new places to diversify. How do you decide, and how do you advise people, like, okay, diversifying this or that?
Yeah, the fundamentals hasn't changed in hundreds of years.
Yeah.
Essentially, it's lend money to people who pay you back,
Yes.
own businesses that produce something of value,
Yeah.
and then own real estate that generates income. So we call those asset classes. So you have shares, property,
Yeah.
bonds, which is loaning people money,
Yes.
and cash equivalents, which is the same. It's just a form of loan. It's like the bank. Think of it like that. So those principles of asset classes, the mixture of each of those will determine when you need the money. So, for example, you have a balanced portfolio, which has more bonds because bonds are less volatile. Like if I lend you money and you're a trustworthy person, like a corporation or a government or a bank,
Yeah.
you pay me back quite consistently. So it's a reliable part of the portfolio. Shares, not very reliable, very volatile.
Yes.
And there's principles to look at those asset classes to make sure they're more reliable, but that gives you the growth because you don't want to be making money from loaning people money and then inflation.
Inflation.
Yes. It erodes what you own.
Yeah.
So asset classes is the principle. Tell me if I'm getting off kilter here.
No, that's good. Yeah.
So asset classes, that hasn't changed.
Yeah.
It's still the same. I know people say, oh, the balanced portfolio isn't good anymore, but if it's part of the other asset class, it still works. Yes. And then the other piece are principles that apply to those assets.
Yes.
So the old saying, don't have all your eggs in one basket.
Yeah.
So if I put all my money in the US, for example, there's periods of time when the US isn't the highest performing country in the world.
Yes.
So you want to own lots of different companies, lots of different countries around the world.
Yeah.
And then also companies have their own diversification. If all I own is dairies, for example, if all I own is this one type of business,
Yes.
and that industry goes under, well, I'm in trouble. So you want to diversify industries and companies.
Yes.
And then there's other pieces as well, like liquidity. So if I own a house on an island and there's no one there to buy it, what's it worth?
Exactly right.
So anytime you invest in something, you want to make sure there's a large enough market that someone's there that can buy it from you. So those principles don't change. So the right mixture of asset classes for what you're trying to achieve, so the cash, bonds, property, and shares, and then principles that apply to it, like diversification, liquidity. There's also tax efficiency, but that's all the principles, and it hasn't changed.
Yeah, definitely. I mean, it is the same as you were saying. And like since I've been involved in the blockchain and crypto and Web3 space since 2012, and I've seen the same principles apply, that there are lots of exchanges, but not every exchange has the liquidity. There are lots of different, there could be, you can call them tokens or coins, but once again, not all of them have either liquidity or the stability, or and then there is the similar approach that some people take in diversifying. And I'm a big believer as well that if you want to preserve wealth, you have to diversify. If you want a slow, steady growth or return on your investment, diversification is key. So that when there is a big event, like if commodities are affected and you have all in commodities, then you're not affected. So in the same sense, similar sort of principles do apply in crypto as well. And there's very few, just looking at all the different exchanges and stuff, or very few places have liquidity. As you said, if there's no buyers, then you have a problem. Since you have ran a podcast that interviewed New Zealand business owners, you interviewed a very large number of them, and you would have come across a lot of successful business owners in New Zealand and some not so successful ones. What is it that stood out for you when you came across successful business owners, especially relevant, to New Zealand market?
Yeah, you see consistency of cross sizes.
Yes.
So one-man bands, their biggest problem is themselves. Basically, their inability to trust and relinquish control.
Yeah.
So if you think about when you start your own business as you get rewarded for ignoring all the doubters and making it happen.
Yeah.
Problem is when you go to hire someone, they're not going to be as good, as motivated, but actually you're just not a good leader yet because you don't have the skill.
Yes.
So the biggest barrier when you're just starting as a person is trusting in others, believing you're worth something,
Yes.
and finding excuses not to do sales. So that's that piece. And there's different stages too. Like the other one is when you get to the 5 to 9 employees, for example, we created like a scaling quiz where we identify each constraint. So that's actually why I've segmented these for this. The 5 to 9, the biggest problem is you got all your clients from your existing network.
Yeah.
They start to get cold. Your conversion decreases.
Yes.
And then you've got referrals. So you got 10 different industries all coming to you and you're trying to serve all different of them and only some pay you enough money.
Yes.
So then your problem is you need to pick. You need to pick who you're going to target and go all in on a niche. So I won't go through. We did it all the way up to 500. I won't make you go through every single one, but fundamentally there is...
Yeah, 97% of the businesses here are, under 10 people. I don't know what the exact numbers are, but they're small, small to mid-size. Yeah, it's the biggest chunk in New Zealand. So.
And it's basically referral generated business that's untargeted and you're not charging enough because you're not targeting the right people.
Yeah, that is very well said. And I've seen the same thing, whether it is a podcast or writing a book that became an Amazon bestseller or whatever. Every time that I have focused and gone down in a niche, it has done well for me. Every time I have gone really, really broad, it has not served me well. It has failed more or less.
Sure.
So, yes.
Well, it's just all marketing is think about if you go into a store and you're expecting to buy something and you get there and it's not what you think. You're confused. And then you're unsure, you're nervous. Should I buy it? Because how do I know it's right for me? So the more niche down you are, fundamentally what you're doing is similar to friendship, is showing that you understand them. And the more you demonstrate you understand them, the more confident they are that you can solve what they have, the same problem. Like if someone's overweight and they come to the gym, you might be able to help other people that are overweight, but what makes you think you can help me? And if you had a niche of Sally that's 42, that's overweight, that is a lawyer, and it narrowed down, the higher probability of success is in her mind because you understand them more completely. So that's why it works. But sorry, carry on.
So coming back to success and achieving success, whether it's in your personal finances, personal business, do you feel like there's any one habit that made the biggest difference to your life? Because earlier also you were talking about how you had to learn yourself a lot of things on the investment side and things yourself because you're good at sales and building sales team, but on the financial advice, you had to learn it yourself. So yeah, any habits that made a big difference?
Yeah, I mean, especially in business, is you find 10,000 reasons to avoid rejection. You find all the things you should be doing when fundamentally, when you're starting, 4 hours every day should spent promoting. So there's a good rule from Alex Hormozi, the rule of 100. He's a successful business owner, where you create 100 minutes of content a day, or 100 minutes of ads a day, or 100 outreaches. Do that 7 days a week until you make $1 million a year. Because you're not going to know how to make your product better if you don't get enough people.
Yes.
You're not going to make money if you're not selling enough people, and you're not going to get better at selling. You're not going to know how to train a sales team if you're not talking to enough people.
Exactly.
It just feeds everything. So best thing I could say is if you're starting business, 4 hours a day promoting.
Yeah.
No matter what, no matter the excuses.
That is excellent. And any such habits on the investment side that help you achieve your goals?
Admit your own ignorance.
Yeah.
I know of maybe 10 people in the world that have successfully been individual investors.
Yeah.
And fundamentally, either they're a hedge fund that don't disclose actually what they're invested in,
yes,
or they have some competitive advantage where they're colluding with governments so they can use currency and stuff like that. I won't label them. But like the people that have some insider information that enables them to pick things, or the people that actually own the business and make it better. You know, the Warren
Yes.
Buffetts of sorts. You know, they actually own and contribute and help with management and blah, blah, blah. So acknowledge your own ignorance. So I know enough, but I know enough to just admit I don't know enough and just own the market and leave it alone.
Exactly.
So fundamentally just own their market, save consistently into it's called dollar cost averaging, and have it geared towards a time horizon, which is 13 plus years. You're thinking about shares. If you're, maybe I won't do time horizons, but that might be constituting advice. But fundamentally, break it down. When do you need the money? Admit your own ignorance, save consistently into that plan, and it doesn't need to change. Don't freak out when it goes down.
Yes.
Because it's like being on a ship. The ship's not going to sink if there's stormy seas,
Yeah.
so it'll be volatile. If you jump off the ship, well, you're going to drown. You know, you're going to crystallize your loss. So stay the course. That's what I'd say.
Absolutely agree with that. And even in crypto, I've seen people who have followed dollar cost averaging, or they call DCA, have done exceptionally well over the last 12 years. And of course, ups and downs come in the market, which is not investment advice, but those things happen in the traditional market every 8 to 10 years, they say. I mean, this is just data in history. And in crypto, it happens every 2 to 3 years.
And just on the crypto thing, I mean, you got to look at, is it a fundamental problem? You know, like if I put all my money in one company, that company could go to zero.
Yes.
Crypto could. If you have crypto as part of a diversified portfolio, so often a lot of portfolios have commodities to give you exposure to something that's a little unique.
Yeah.
So if you've got a certain percentage allocated to crypto as part of your diversified portfolio, then dollar cost averaging makes sense. If fundamentally you put all your thing in one particular crypto, and that crypto could go to zero. So let's sometimes the boat, you got to look if it's built well enough to navigate the stormy seas.
Oh, absolutely. And the reality is that no one has a crystal ball. Like, no one can tell
Yeah,
that,
I
okay,
don't
this one particular company or one particular coin is gonna go higher or lower. So, I mean, there's just sort of my personal belief. So that's why I never do that type of financial advice, that you should put all your eggs in just this one basket. And that's where diversification helps, as I've seen from successful people. What about, have you ever traded crypto or invested in crypto personally?
It was in my KiwiSaver,
Oh,
not
okay.
by choice, but it's fundamentally, as I say, it does seem to track quite similar to traditional markets. There seems to be a relatively similar correlation.
Now
between-
there is a lot stronger, and that's part of the reason is because it is the same, like 401k in US, which is a very big investor in, like, 401k goes to JP Morgan and Goldman Sachs and likes of them, and then they now diversify with ETFs and crypto as well. So that's why now they both track
That's
parallelly
part of it.
in most. Yeah.
Well, just like the technology is incredible, being able to transact quickly. I was even planning the idea, one of our developers was like, if our goal is to help people deposit and invest as fast as possible, what if we leverage crypto to enable with some sort of stable coin to enable us to do that faster? That's incredible. The other thing is government overreach is a real thing. Currency risk. I was talking to a guy in Argentina with inflation.
Yes.
He's like, well, my money's not worth anything.
Yeah.
So there is some utility in the real world implications of crypto. From an investing standpoint, I would feel more comfortable as it a small percentage of a diversified portfolio, and it's fun. You know what I mean?
Yeah.
So that would be my 2 cents on it.
What's your outlook for rest of 2025? What's your sort of personal plan? Where do you intend to focus your energy on the business side or investment side? Or
Yeah, well, my investments started to change. Dollar cost averaging, diversified portfolio. In terms of the business, like I think, like I was saying, the reason I learned financial advice is because I want to help people live fulfilling lives.
Yes.
And I think the easiest way to change a person's life is to change their environment.
Yeah.
You can either help them when they're younger, when they're developing their identity, like parents, or where do you show up every day? Or you go to work,
Yes.
you go to the business. So that's what we're focusing on now, is giving people the mentorship in business whether it's product, sales, marketing, finance, whatever, and then giving a way for them to invest that money. So that's the sole focus at the moment, is create an incredible offering for people to get the mentorship they need. And we're going to benefit from their business success as well because they can invest. So that's the big focus, 2025.
That's fantastic. Like, since you work in New Zealand, economy-wise, do you have any view on where, like, the New Zealand economy is going, or what do you feel like? Are we going in the right direction?
Well, we're in a recession, probably one of the worst since the global financial crisis. And you've got a whole lot of money that's in the market.
Yes.
Because of COVID to support people. There's a whole lot of money in there, and we don't have a whole lot of people working. So I won't speculate on when the economy is going to be going well, but if you're not planning for retirement, fundamentally, we can't afford you.
Yeah.
Because the population's aging.
Yes.
So we're going to have a whole lot of old people we can't afford. And if you can't support your own retirement, you're more confident than me. So I don't know when the market goes in cycles. We're in a recession now from talking to business owners.
Yeah.
Don't use that as an excuse. Still do your 4 hours a day. The people making money, but be nervous about retirement because we can't afford you.
Yeah. What would you do differently if you were starting today? As you just come out of university, you're just starting today, what would you do? Is there anything you would do differently, or would you have the same game plan?
There's two things you can spend, your money or your time.
Yeah.
I spent my time when I should have spent my money. By that I mean there's people that have skill sets that have already been through what you've been through. If you either work for them in some sort of mentorship capacity or as an intern, that's going to save you 10 years. So if you're coming out of university, don't think you're some hotshot with your degree or whatever. Come in humbly to find someone you respect and admire so you can pay down the 10 years it would take for you to learn what they know.
Absolutely. Oh, 100% agree. And and on that note, thank you so much for your time. But before we go, do you have a ask? Is there anything that you would like to share about? Is there anywhere on social media people can find you or connect with you? Or feel free to share.
The ask would just be, we spent, 80 hours identifying the key constraints in a business based on their size, up to 500. I don't know, after 500 employees, what happens with them. And it's a free quiz. You take it and we'll give you a free session with someone to help solve your biggest constraint based on that quiz.
Yeah.
So, we'll have a link, I guess, in the bio and they can click if they want.
Yeah. Fantastic. Thank you so much, Ryan, for your time, and wish you best of luck.
Thank you, brother. With a handshake.
Thank you for tuning in to this conversation with Binance New Zealand. Make sure to subscribe, follow, and engage with Binance New Zealand on social media. You can find us on Twitter at Binance_NZL or on Instagram, Binance New Zealand, one word. As well as you can also go to our website at binance.com. And finally, please note that this discussion includes insights from non-affiliated third parties and key opinion leaders. Binance provides this platform for informational and educational purposes only and is not responsible for any content or insights provided. This information should not be considered as financial, tax, or investment advice from Binance.